You've heard the first budget of the Modi government. As somebody was saying, we had expected that it will be long on vision. It's turned out to be long on duration, possibly the longest budget speech anybody has ever seen. Mr. Jaitley took a 5-minute break in between. I suspect some guys went to sleep for even longer than that on the boards. But at the end of it all, gentlemen, I have to confess, I am disappointed. I had thought we were going to see some great new vision over 5 years. The economic survey said, we will see a situation, hopefully, where the direct tax rates are taken down to that level of our competing countries in ASEAN, that the corporate tax rate will come down, that we will have some big change. It seems to me, however, that this is the kind of budget that, frankly, could have even been presented by Mr. Chidambaram. I mean, as I said, a Chidambaram budget with some saffron lipstick to make it look somewhat different. At the end of it all, frankly, I don't see radical change. We have with us two extremely distinguished commentators, Mr. Deepak Parekh and Mr. K.V. Kamath. Deepak, let me start with you. I said, I personally am disappointed. In fact, I don't even know where he's getting all this extra money from to bring down the fiscal deficit. First tell me, how do you see the totality of the picture? And secondly, some individual proposals that strike you as good.
I would say that the time the finance minister had was only 6 weeks, Swami. This government is in power for 6 weeks. And in the 6 weeks, there is a little big bang they can announce, big bang measures. But there is a huge amount of clarification, there is a huge amount of intent and stressing on manufacturing, on job creation, on education, on banking, on infrastructure. He has touched on a number of subjects, but I guess you'll have to wait for another 12 months to get the big bang or the wider picture.
Mr. Kamath, do you see any real new vision? And if so, which are the major areas where you think, there is a vision and we can look forward to some structural change compared with the UPA kind of presentation?
Yeah, Swami, the structural change that I see is the willingness to listen. Because in this budget, what I see is he has clearly identified what are the challenges which economic growth in that context business is facing, and said that there is an open mind and a broad agenda has been given. For example, on the tax side, there are a whole lot of things he touched upon which will be addressed. And similarly, openness of mind in terms of FDI. So to me, there is a signaling in terms of intent, with clearly laid down approaches. We do not yet know how the approaches will play out, but I think we need to give time, as Deepak said, for this to play out. And in terms of keeping the deficit where the number that has been talked about in the context of not raising tax, I think itself is something remarkable, because most experts had thought that that number is going to go haywire if you don't increase taxes. But in the event, broadly taxes have been held in place, and the deficit has been also kept under check, which only means that, to me, that expense control has also been on the other side resorted to. So we'll have to see how this plays out.
I think this is for the first time in business television that we have Mr. Deepak Parekh and Mr. K.V. Kamath coming together to analyze and decode the budget. This is an ET Now exclusive. We've also been joined by Madhu Kela and Samir Arora. But Mr. Parekh, to you, the disappointment really from the market point of view is that he hasn't gone ahead and scrapped the controversial retrospective tax amendment. Many people thought he would do it. He's fallen short of doing that. Is that a disappointment according to you as well?
I think I was disappointed. I was disappointed at that. He has taken care of future. He has said we will not introduce anything in future, but the existing cases, which he says are in different stages of legal hearing and in different courts, he said they will form some kind of under CBTD a group which will tackle these pending cases. And I think short of removing it, they will probably make it easier for companies who are impacted by this retrospective tax, and make it simpler for them to meet their liabilities. So that is a disappointing factor. He could have just said that we give up all the old retrospective and change it. I think I was disappointed also on the defense side that, for the last 10 years, we've got no FDI in defense that we can talk about. and having 26 to 49 is not going to get you manufacturing of defense equipments in India. It's not going to transfer technology. It's not going to create jobs in India. And I think there is no difference between 26 and 49. And he should have taken a bolder step to allow 51% in defense if he wanted them to shift manufacturing base. The finance minister admitted that India is the largest importer globally for arms and equipments. 15% of global imports are in India. The second largest country is Pakistan and China with 5%. And we are importing year on year. Budget for defense, he made 2,29,000 crores. Why couldn't he give 51% on case-by-case basis? I'm disappointed at that. And even on the insurance, if you see, for 26 to 49, but 26 is automatic and 49 is through FIPB. I couldn't understand that if it's 49, why couldn't have been automatic? He has to go to cabinet, he has to go to parliament to amend the law, Insurance Act. But if the act is amended, 49 should come as automatic.
I'm going to take up FDI in just a bit, sir. But Mr. Kamath, you had a view on the retrospective taxation. He's fallen short of repealing it. He says he's not going to tax people retrospectively anymore. But what the markets and investors wanted to hear was a very clear message, not a statement of intent. This is just that, a statement of intent.
You know, the way I would look at it is, yes, we would have all liked the past also to have been addressed. But, what has effectively been done is ring fence the past. And those who were on today sitting on the fence as it were, because this is going to be a bother, will now have clarity. And those boardrooms where investments into India were being withheld, those will happen. Yes, we would have liked to see the past being addressed, but I think the future will bring in a whole lot of flows which otherwise would have been stuck. Similarly, I would lay some stress on the whole issue of transfer pricing and the approach to that, and that it would be looked at and set right, because that's the other area where a whole lot of investment blockage has happened. So these two areas I think would be positive in terms of intent of investors wanting to come into the country, or indeed domestic investors.
Deepak, let me come over to you on some of the proposals on the banking sector. They said, well, we will sell some more equity of the public sector banks to some retailers and so on, but we will not bring the public sector holding below 51%. Given the needs of recapitalization, do you think this was bold enough? Do you think that it should have been brought below 51% so that they can raise much more capital? How do you see the totality of the problem of the entire banking sector of meeting the Basel III norms of capital adequacy?
If you see the equity held by government today, in many cases it is 60, 58, 70, so he'll bring all PSUs down to 51%. And that itself will give them $9 billion according to a recent estimate. So there's enough amount of money can be raised by the government for the current year. He has not talked about a bank holding company. He has not talked about going below 51, but you can see that probably in the next year, because there's enough room to get 40,000 crores on banks, bringing down government stake to 51%. He's also talked about bank consolidation, and I think it's one of the first time the minister has talked that there is need for banking consolidation. So I think give him time. It's too early, as I've said, for him to come out with the full pack of cards.
Okay, it seems to me that, we're being fairly generous in saying, okay, even for a vision there hasn't been enough time, let's give them enough time for a vision. Mr. Kamath, do you really see that in this budget there is any real investment push? I'm finding it a little difficult to see what there is in this budget which might really result in a big revival of investment. Can you see some clear signs?
No, I don't think this budget is aimed at that. This budget, of course, has stated intent that you will have a clear roadmap on where the government wants to look at growth. We'll have a clear roadmap in terms of going forward on your tax situation, and also indicated that there are certain other areas which will be looked at. I think there was reference to mining and deepening the infrastructure of the country, whether it is roads, rural roads, ports, airports. So it ticked all the boxes. Now it is for the other ministries to actually play along in terms of doing what they have to do to build up confidence. So in a way, this budget ticks all the boxes, touches all the bases, and now I would think the ball passes to the other ministries to get things going so that you then have the investment mood correct itself. As of now, as of yesterday, the investment mood was still not correct. We hope this will start the process, but we need the other ministries to come along on this.
Kamath, Mr. Parekh, gentlemen, stay with us. Let me also connect with Madhusudan Kela. Madhu, thank you for joining us. Markets are excited. Markets have made a comeback, but from a market perspective, what is that big idea and why are markets so excited?
From a market perspective, first of all, there is no real disappointment anywhere. Essentially, as Mr. Parekh was mentioning, that it is only been 6 weeks that this government has been in power. And we have to give them time to get that big, bold, big bang announcement. And I think since markets had sold off in last 3-4 days already, so going into the budget, we were going with a slightly lower expectation. So that's the reason why you see markets seems to have rebound. I just want to make one mention here. If you look at the intent of the government, they seem to have touched many things which have not been touched even in the past. Like for instance, a 10,000 crore rupee allocation to promoting entrepreneurship. Now this is just the initial corpus, but it's a fantastic thought in a country like India. If you can have a fund like this from the government side, it can promote a lot of enterprises. So I would say there is a lot in the budget in final details. However, if anyone was expecting anything big bang, that is not there.
Okay. Samir Arora, what is your sense? From a market perspective, do you think this budget has ticked all the boxes?
I think it ticked all the boxes and more, because the thing is that, as everybody is saying, it was unreasonable to think that in 6 months you will get a detailed roadmap on each sector. But what you've got is a promise of the priorities, and then hopefully in the next 6-9 months and around the time of the next budget, details on many of these things. But the main thing that everybody is missing, at least in the market point of view I'm saying, is that this government is a bit different because it does go bottom up. If you look at the priorities, look at how the speech was started. It started by retrospective tax amendments or ring fencing and tax proposals. It didn't start with saying that we will give this subsidy, that subsidy, and later on come to the corporate or business, what they were expecting. All the things that the business people wanted was addressed upfront in the beginning for the first 10-15 minutes. But obviously there were no details. I think to expect that in a 6-week program you will get details would actually be more negative. I think Swami is wrong. The big bang in this budget is that things will be done bottom up, and it's more on execution rather than giving some grand proposals which then after 6 months nobody remembers as to how they were executed or if there was any progress. So here the bet is in a slightly different way from previous government's proposals and implementation of those proposals, which never happened.
Mr. Parekh, are you a little foxed by the budget arithmetic? Because he has given away on the direct tax front. He hasn't garnered that much more on the indirect tax front. Disinvestment is up, but not dramatically so. And yet he hopes to stick by that 4.1%. The biggest criticism about Chidambaram's budget was that the numbers just didn't add up. Would you say the same thing about today's budget as well?
See, we have to really look at the detailed numbers, but the indirect tax has gone up by about 27,000 crores or something, if I recall. And he's not given a disinvestment figure. He said that the banks will come down to 51%, but the figures have not been given. So maybe there will be more disinvestment. There is disinvestment of Hindustan Zinc on the cards, Balco on the cards. So he may do some of them. They don't need budget discussion or budget approval. So disinvestment will be a much higher number, you will see, but he's not talked about it in detail. So, and you must give credit that he is even stuck to he did say that it's a bit ambitious. The revenue receipts, both direct and indirect, are ambitious from the interim budget, but he'll stick to it and he'll try to achieve it. So also is the fiscal deficit number.
Right. I think Professor Debroy also joins in here, and he's got a pulse of the thinking in New Delhi. Professor Debroy, clearly our eminent guests believe that it's a practical budget given the constraint. What is your view? Do you think he could have done more? Do you think everyone thought it'll be at least long on vision, like Swami said? Do you think it's short on vision and short on detail as well?
Well, I think the budget began quite well because it did talk about it not being the only instrument and this being only a precursor to a roadmap that would follow. Unfortunately, somewhere down the line, it veered away from that promise. Now, the big bang does not mean announcing big bang proposals that thereafter fail to materialize. I wasn't expecting those. What I was expecting was the core of the budget, which is revenue and expenditure. Now, neither on tax or on expenditure have we had the necessary reform attempts.
All right. I want to take this question to Mr. Kamath, sir, because everybody's been talking about how divestment will be a very ambitious, it will be an overdrive. It's a very, very dismal projection. They're making only 43,000 crore from divestment, really. Mr. Parekh, if I may pose the same question to you. We were all talking about divestment target of about 80,000 crore rupees. It's just 43,000 crore and the non-PSU divestment is only 15,000 crore. Are you disappointed that the government is not looking to leverage the huge bull run that one is seeing on the Law Street?
Yes, I think they could have raised more resources by more divestment, and you know, we had heard that SPV will be formed and they will put some public sector stocks in it and the SUTI stocks like ITC and Axis and a few others, but he's been silent on that. I don't think he needs, as I mentioned, I don't think he needs the government, I mean the budget approval. He can still do that, he can still achieve that divestment target. And I think you must give him time, because you know, you cannot flood the market with massive amount of new issues and follow-on issues. The market will not take it and you won't get the right price. So you have to stagger it during the 8-9 months that are left.
Nilesh Shah, this question is coming your way. What do you make of the budget arithmetic and the key assumptions?
I think basically this budget also by and large confirms the assumptions and the budget arithmetic which were presented in the last interim budget. So I don't think it's any dramatic shift. I think really where this budget really scores is the focus on the core sectors. I think the emphasis on roads, emphasis on airports, emphasis on tourism and tourist circuits, I think that's clearly been a big focus. The fact that even on the river linking, it's a good start in terms of having the feasibility report. I think these are some of the good starts and good focus. In addition to that, clearance of REITs, the REITs on real estate, proposal to have REITs on infrastructure, increasing the interest exemption limit for self-occupied houses, I think also gives some kind of boost directly, indirectly to the core sector. So I clearly believe this is a budget of the core sectors. There's very little for the financial sector and very little for the markets, but I think on the whole, it's positive and constructive for the economy and the core sectors.